This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
So what happens when we sell some plant and machinery? How do we include that in that computation? What figure do we include? Because quite often in an exam question they give you two figures. All right, so it is always the lower of, there we go, the lower of the sale proceeds and the original cost. Whichever figure is smaller, that's the figure you put in. And it's deducted from the pool before you work out the written down allowances. So pro forma down the side, headings across the top, add all the additions, take out the disposals, underline it, subtotal it, and then do the written down allowance. Now it can result, it says it will there, I think the word probably is can result, in a balancing allowance or a balancing charge. So a balancing allowance, so you've not claimed enough over the lifetime of the asset, that can now be claimed. And a balancing charge means you've claimed too much. Let me show you what I mean by that. So say we had a written down allowance of 8,000 and we sell it for 12. Okay, that's what it would look like in the computation. Now that means you've had too many allowances, because the balancing charge would be that. You notice no brackets, so if you send that across to your end column, which is your allowances column, and they've all got brackets round, that one doesn't, that's obviously going to have an impact on your answer. Because at the end of the day, if that asset has been sold, it needs to be emptied out of the capital allowances computation. So you need to make it nil at the end of the day. Alternatively, let's have a look. Another simple example. Written down allowance, say 14,000. And we sold something for 12. We haven't claimed enough allowances. And in order for it to be written off out of the capital allowances computation, we need to have a balancing allowance to claim those last allowances on that asset. And that figure obviously then goes into here with brackets on it. Okay, so that's kind of how it works with that situation, just to explain the balancing allowances and balancing charge. Now there is a special write-off if you have a small pool. If the written down allowance on a small pool of assets is £1,000 or less, you can write it off in one go. Okay, get rid of it. Write it off. So let's have a look at example number 1, where Beth prepares accounts to the 5th of April. The written down allowance at the 6th of April on her main pool was 1,250. She bought some machinery in the year for 10,000 and she sold an item of plant for £500, which cost 3,000. Remember the rule? The lower of, that's correct. Okay, so let's have a look at the answer for that one. Again, headings, nice heading, showing what accounting period you are dealing with. Headings across the top. Pro forma down the side. Written down allowance brought forward in the pool. Now she bought some assets which qualified for AIA. So they're in that column and we're going to claim AIA. We check it's a year, £1 million, no prorating, put the allowance straight into the end column. And she disposed of an item out of the pool. Okay, now a pool is a pool of assets. Can you imagine if you'd got hundreds of assets in your business and each one had to have its own column? Never going to work. The main pool is a pool of assets which we can always claim 18% on, so you might as well put them all together. So that 1,250 could be anything. It doesn't really matter. Just put them in the pool. If that's where they go, put them in the pool. the balance on that pool after we've taken the disposal out is only £750. So instead of written down allowance 18%, no, we're just going to write it all off. So this pool now is empty. And we've claimed it all in one go. And obviously this figure of 10,750 needs to go across to the adjusted trade profits and deducted therefrom. Now, there are some circumstances where we have some assets that don't go in the main pool and they don't go in the special rate pool. They have their own separate item, its own separate column. Now, this one you will come across in your exam. This one is very unlikely, but you just need to be aware of it. So if a client of yours is a small business owner and has a company car, a car that they use within that business, then there will be private use of it. And when we adjusted the profits, the question told us, I think it was Jeremy, in Jeremy's question, that he did 9,000 out of 12,000 miles. And therefore you had to add back that. Well, it's the same with the capital allowances. If there is a private element of the use of a business asset, then it has to be added back so that the client pays tax on it. Now, the private use of an asset, sole trader or partnership, it's where it's used for business and partly for private use, and typically it's a motor car. So only the business proportion is available for capital allowances. So what we do is we put that vehicle, and we'll stick to vehicles because it's the easiest, we put that vehicle in a column on its own with private use or private car or something as a heading at the top. You then do the written down allowance in full, and then we're going to insert an extra column after the allowances columns and before the total column, which is our calculation column. I'll show you what I mean here. When we get, there's an example there we're going to have a look at in a minute. So when the asset is then disposed of, you need to do dispose of it out of the private use asset. You'll either get a balancing charge or a balancing allowance, and then that too will need to be reduced according to the private use of that asset. I think, yeah, that's fine. Let's do an example, because an example is just going to make it so much easier. So Jane prepares accounts to the 31st of December. Tax written down values. So we've got two columns with numbers in them straight away. The main pool column and a car column. A motor car with 30% private use. So we're going to need at least one column for that. Another column for that. Now, she bought some plant and machinery. So we're going to need a third column for AIA. Then she bought a car to be used by an employee. Now, this there is irrelevant. I think I've spelt that right. It goes in the pool because the individual, it doesn't matter what private use the individual does, because you're trying to work out Jane's business use of assets. Okay. Then she sold her car and bought a new one. So we need another column for the private use car. So one of the things when you're doing capital allowance is to work out how many columns you're going to need. Okay. So shall we have a look at what the answer looks like? Okay, so keeping the question next to you, You've got an AIA column because we know that we bought some plant and machinery which we can claim AIA on. Now we know that there were written down values brought forward in the pool and the first car. See the headings? Business use car number 1, because that's the one she already owns and then she sold. So there's going to be a balancing allowance or a balancing charge on that. And you notice also that's the business use. Then she bought a new car, so it's got its own separate column. It's important. And again, we've put the business use at the top. And then this is the total column. Several ways you can do this. I'll show you how it works. So we add in always with these headings across the top, pro forma down the side, all the additions in first. So we've got the plant in, which we can take AIA off. That goes into the end column. Other additions. We bought a car for the employee, if you remember rightly. And it's this that dictates where it goes. Check in the rates, it's in the rates. And because it's a 40 gram per kilometre, that goes into the main pool. While you're if you have the question next to you, you can tick them off as you're doing them to make sure you've included everything. So you tick off the 2 written down brought forwards, tick off the plant, tick off the employee's car. Now tick off the car that she bought. We're doing additions first. She bought this car. Now it doesn't matter what the grams are. The grams will reflect the written down allowance, but because it's a private car, it goes in its own column. And then she disposed of her first car. So we've put in there the lower of the cost. So it's the lower of the cost and written down value. Okay, 9,400. We've subtotaled it and added the columns up. So 21,200 plus 10,6, 13,6 less 9,4 and the 16. Written down allowance on the main pool, it's 18%. That goes straight into the totals column. Now, notice here, I'm just going to get rid of that arrow because it's just in the way at this particular moment in time, having done it. Oh, let me do it again. There we go. Because I want to have plenty of space to show you this. That was the value, that's what we sold it for, and this is the figure that we have left. Now, at the end of the day, that asset has been disposed of. It's no longer in the business, and we need to write it off at this point. In order to do that, we need a balancing allowance. And you notice it's in full. Always do it in full in the main body of the computation. But only 70% of it is allowed to be claimed. So 70% of 4,200 is 2,940. The full computation has the full allowance, balancing allowance, written down allowance. But you can only claim the allowance, 70% of it. And that's the same with the special rate pool. This car, the second car, 16,000. Now the grams have dictated that you can only have 6%. Check it in the tax rates at the front of your exam. So only 6% of 16,000, which is 960. And again, in full in the computation, and yet we can only claim 70% of it. Written down allowances. These are then the balances carried forward. So full, that's an exam style computation to a large extent. And I think the more you do them, the more you get used to them. I think you're getting used to the idea that it's headings across the top, pro forma down the side. And to start with, you will need to keep checking the rules, checking the rates. That's not a problem. This is only the first time you've been through it. short life assets. So you can issue an election to have the assets taken out of the main pool and put in an individual column. It's called a depooling election. It doesn't happen very often in the exams. You can do it on anything except cars. What it does is it accelerates the capital allowances because the asset of machinery is going to be sold at a low residual value or scrapped within 8 years. And that will be calculated separately, and it will have the heading short life asset. So that will be the heading at the top of the capital allowances computation. If no disposal takes place within 8 years at the end of the accounting period, then whatever's left goes back into the main pool. You can have AIA on a short life asset, which would, in 99% of the cases, will actually write it off, so you wouldn't need a column. Because it says there, it's unlikely a depooling election is now worthwhile for most unincorporated traders. Okay, an exam question may still be set, of course, for an unincorporated trader selling a short life asset where the election had been made. In other words, it's already in a column and then we've sold it, so you might get one of those. So you need to know how these things work, which is why we've included example number 3 here. So example number 3, John prepares his accounts to the 31st of March each year. So 1st of April, he's got a pool with a value written down, brought forward, of 16,000. In July 22, he bought some machinery for £1.02 million. AIA, I'm thinking. And in September, he bought a photocopier for 40,000 and made a short life asset election. And in July, he sold the photocopier. Okay, so let's have a look at how that works. Now, one thing to bear in mind with this, and I've told you before about reading your questions carefully. What does it say at the end? Calculate the capital allowances for the years ended. There are 2 computations here. Okay, so having read that question carefully, you need to go back to these dates and work out which one of them, if any of them, are in the following year. Okay, that one is in 24. Be careful with the dates. All right. Let's have a look at the answer and see how it works. Example number 3. Example number 3. So we have, and for this purpose only, we've done that in the AIA column. Only for this purpose because the size of the number. All right, you wouldn't normally do that. So again, pro forma down the side, labels and headings across the top, work out how many you need. This is your total column. Add in all the additions after you've put in the balance brought forward. So we've got machinery and the photocopier. Okay, and the photocopier. Add those 2 together and we're going to claim the maximum AIA. Now there is a balance because obviously the value of the assets prior to the AIA is 1.06 million. So 20,000 of the machinery goes back into there and the 40,000 has gone into the short life asset column. Subtotal. Written down allowance, start at the left, work right. You notice again that this column now is empty. It's a calculation only column. Main pool, written down allowance, 18%, 6,480. Put it in the end column. Now the short life asset is also entitled to 18%. £7,200 is the 18% of 40,000, and again that figure here of £1,013,680 goes to the adjusted trade profits and is deducted, hence the brackets, and we have some balance carried down figures, because this we were asked to do it twice, weren't we? March 23 and March 24. Main headings. Written down allowance, you notice those figures have been copied nice and neat down to the next one. Now the short life asset has been sold for £15,000. We've subtotaled all our numbers, and then we're going to do a written down allowance of 18% on the main pool, which comes to 5,314, and then a balancing allowance on the short life asset. It's been written off, so that at the end of the day it's out of the accounts, it's gone, it's finished. So that's how we deal with short life assets.